Welcome to today's presentation on Jet2, a budget UK airline that travels to a range of different holiday destinations. I'm going to be talking about the stock and the recent convertible bond that got issued back in June, and what it means for the stock price, where the stock's heading, where it's already been, and our holdings in the or our interest in the company, and where we see, as I say, where we see the stock moving to. So the first thing that we're going to look at is the overview of the bond itself. Now, I took this screenshot about a month after issuance, and as we know, the airline sector, whether it's in the UK, US, or anywhere, is highly cyclical. It's not a defensive stock or a defensive area at all, and cash flows in this sector are very sensitive to politicians' trigger fingers or any changes in the sentiment or the backdrop, the economic backdrop. And this screenshot here of FactSet was taken a month after the June bond offering that came out, and you can see at the time it was trading at 99.30 on the dollar, and we can see here that the implied market conversion price of approximately 17.93 for a conversion ratio. Now, at the time, that was a 44% premium on issuance to the market price, which was 12.43 for the stock price at the time. So with a 40% plus premium, the options clearly are massively out of the money. Average premiums for airlines in terms of convertibles before COVID came in, 20 to 25%. We're now seeing premiums of 40, 45%, and in some cases even above 50%. And that's just in airlines, which is insane, the premiums. Obviously, these are 5-year bonds. Ones that have been issued this year will expire 2026 and so on, but it's still a massive premium. And we can see here that for the bond to be trading in the money at the current prices of this screenshot, it needs to be about 70 cents on the dollar, give or take, which obviously would equate to a premium of about 40%. If you were trading at 99 today, down to 70 is your 40% premium to make up the difference. The other thing that we are looking at the moment is one institution is holding this, and that's State Street Advisors, and they own approximately just over 20% of the 386 million issue, which is a solid chunk for one particular advisor. This is the convertible bond offering and the deal that came through, so you can actually see here that it was issued at conversion price at 1806 on the date that the bond was offered. It was the 3rd of June this year, so end of the first half of the year, and it came out at 1290. Since then we are slightly lower, and we've got a premium of 44% that we have to achieve 1806 with an expiry of June 26. So 5-year deal, paying 1.62% carry, so twice a year obviously. So at the moment, if we look here at the share price, we are slightly under in terms of where we were on the bond offering when we were slightly higher. Now, we know that a 44% premium is relatively high, and it's a relatively rich premium. What people are not considering, and we're short the stock at the moment, is how low it can go before we turn around. Jet2 has just signed a deal with Airbus to buy just over $2 billion worth of new aircraft from them, moving away primarily from Boeing. Back in September, they also signed a deal for $4.5 billion. So they spent the best part of just over $7 billion US acquiring new aircraft in a period where Jet2 released a statement stating that they're expecting winter bookings out towards even 2022 to be relatively flat and not buoyant at all. In the near term, we are still relatively bearish and short. One of the questions that we are looking at though is how low can the stock go before we turn around. We've got a 5-year timeline out towards 2026 when we'd need to see the bond at, as I say, 70 cents on the dollar, and that would achieve the premium of 18.06, which is a 44% premium from issuance date. We think that if it went down to say £10 a share or even sub £10, you're then looking at an 80% premium. Then it's massively changed and there's opportunity for money. At the moment you've gone from pre-tax profits of 146 million to losses in the multiple hundreds of millions on the last earnings, and things will not change as they're injecting, as I say, roughly $7 billion worth of debt into the company in terms of capital purchases for new aircraft and so on. So in the near term we are very much bearish, and it's a question of how low the stock can go before we can actually turn around and hit those convert prices before either on the expiry or before. And we think by 2023, somewhere around there, the share will have bottomed out and you'll start to see travel picking back up. A lot of the holiday destinations and resorts that Jet2 have partnered with will be fully operational again, and travel should be back to normal levels, shall we say, in terms of usage and whatnot. So these are a few things that we're looking at, but the biggie is obviously, as I say, this deal that has come out in June, and where we'd need, and the fact that there's only one institutional backer at the moment, with, as I say, 20% of the total issuance, is a really solid chunk. So there won't let anything too drastic happen to it, but I would be cautious. We are short, and then we are waiting for some sort of pivot. Once we know that when airlines are struggling and they buy new aircraft, expansion is on the horizon, but in the near term we've got to be short. We remain short, and we've been selling it from over £14 a share. And also, if you look at the move that we had back in 2020 Feb down to 2020 March, when we went into the lockdown in the UK, the markets went from 100 to 0 and then back to 100. So you can see we went down to sort of £2 a share from a high of £18 just before COVID became mainstream in the media and so on, and airlines really got pumped in that final 2 months. You can see the run between £8 and 19. The shares doubled in 2 months just before COVID became mainstream in the Chinese media and so on, and it was artificially pumped up. We know that because we can see insider transactions from insider buyers and so on that have been made public that then dumped their shares, and this was a classic move. The move to the downside no one could have predicted with COVID, and then it happened. But you can see that it's clearly had the momentum to go from £4 up to 14, so 300% runs, and then eventually this will settle. Whether it goes sub 10 remains to be seen. If it went down to say £7 or £8 again, if we had cases spike over winter, perhaps we go into another lockdown here in the UK, resorts get shut down, and Jet2 is running at obviously not even 30% capacity right now, then you can expect to see the share price drop. And if we came down to say £9, £8 a share, you'd have over 100% premium then at that point, which you just have to, it's got to be a solid investment opportunity to potentially make lots of money. But this is a long-term play. In the near term we're hedged short, and then we'll gear it long eventually and target the £18 conversion. But until we get there, as I say, we are relatively bearish on the stock. We are watching backers as well, commercial backing. There's very little of it to watch, as I said, but it'll give you an indication of perhaps where the price will go, and the wild swings that airline stocks can have. So I hope that explains it a little bit. No technicals involved. We're pricing it purely off the convertible price. Premiums, record premiums across the board, not just in airlines but in all sectors. And the record issuance that we saw in the first half of the year has continued into the second half, and we beat last year's record issuance for already year to date in 2021. So this sector is certainly one to watch, and there's going to be lots of money hopefully watching these sort of companies play out. Thank you.